a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Let's get the spoken word now on the stock market, what's left of it for the month of September, with our chief equity strategist, John Blank. He's sitting right here next to me, as a matter of fact. Going to deliver it in person this time, aren't you? Let's just get right to it here, because you've got an interesting thesis. Stock markets, the U.S. stock market looks overbid because global fundamentals have turned. What's changed?
Terry, what's changed is outside the U.S., and global growth reaching back to a 5.5% GDP growth rate trend, which we haven't seen for 2 years. And so for 2 years, what happened was the small caps sold off big time, and the international stocks, which went with them, sold off big time. What came up during that time was the S&P 500, the large cap stocks in the United States. Mm-hmm. And it was partly because it was the least, the clean shirt in the dirty laundry, no alternatives, all these stories. The bottom line is those stories are no longer needed. The facts speak to growth outside the United States, led by China, and that means it's a sturdy set of facts, and that's changed.
Couple that with a strong U.S. dollar.
Right, the strong U.S. dollar, meaning money's coming into the United States trading, there is an alternative, at least dirty shirt. Mm-hmm. The bottom line is it doesn't need to be that way anymore, because they're running from the opportunities, which are strong growth fundamentals outside the United States.
All right, and so does rising oil prices have any role here at all?
The answer is no, because inventory that's been slamming on the oil market is Saudi-driven. There is still no indication, there's a lot of talk, but no indication that's over. Mm-hmm. So it's a range trading. There's no V-shaped recovery. It's just flatlining between 35 and 50 for the time being for the next year. So oil is out of the equation, other than this idea of growth coming back in the S&P 500 through rising energy prices. But that's off the table, which is, again, off the table for the world and all these different markets until it's proven otherwise.
All right, we are sitting here talking on the 19th of September. I say that because later this week there is a Fed meeting, results of which are going to be released on Thursday of this week, correct?
Wednesday or Thursday, yeah.
Wednesday or Thursday. And nobody's expecting a hike in rates this time around. Not you, consensus on the street, same thing. So what do you say, though, to those out there that are proposing the theory that these low interest rates are creating financial market dislocations by pushing more capital into riskier assets in the search for returns?
It's absolutely true. And we're also seeing the early part of that unwind, which is why the markets are selling off a little bit and going staggering around a little bit, because as we enter the Fed raising hikes really, really modestly, or just even the passage of time, we're exiting that period, right? And so there's no question it's happened, but is it a place where there's a bubble? The only answer probably is in real estate. If we get a real estate bubble, or there is one, I think that's where there could be one, because of the low rates come to funding, and funding goes to real estate people who never know how to shut the faucet off. Stocks, 17 PEs, they'll sell off. They might lose 10% on a valuation pullback. That's not a bubble.
Do you see any kind of a year-end rally?
I do. I think we'll see a rally as long as the presidential election meets consensus that Hillary Clinton's going to win. If it's not her, we have a different set of circumstances that emerge, and Trump is elected, then I have a different opinion about the stock market.
All right, let's talk sectors quickly. Infotech is the star, you say?
Yes, they have to be. If you're in a global setting, if you want to be consistent with that logic, and I am, and the Zacks ranks are, you like Micron Technology, ticker MU, because it's the Zacks #1 ranked stock in the semiconductor industry, which is always highly ranked and in one of the top ranked industries right now.
Okay.
Have to like semiconductors. It's global, a lot of that stuff. 36 companies, most of them are outside the United States. One that's in it is Micron.
Then there's telcos.
Telcos. Well, wireless, right? All this interconnection from the clouds on wireless, any fiber optics, telcos, whether wired or wireless, are part of this story. So you got to like a Telefonica, right? Which is the Latin American wireless and wired phone company, right? They're delivering all this data and information across all those semiconductors. And they have a 7.2% dividend on top of that. So you got to like value plays in telcos, and you got to like the fundamentals right now.
One thing I found interesting, healthcare, which is a perennial strong favorite, right, in the sector list,
Right.
has now just moved down the list a couple notches to just attractive.
Right. Well, first of all, it's still as attractive as ever been. It's just relative to infotech and relative to telcos, it's less interesting. So it's narrowly not gone anywhere. It's these other two that have risen. That's the point of this whole global fundamentals turning. Something is rising such that the relative plays now are different.
Okay. John, it's always a pleasure, always interesting to get information from you. And don't forget, it's always interesting to go to our website to find out more information. There's more commentary there. There are more stock picks, stock picking strategies, all linkable right off the homepage at Zacks.com. With John Blank, I'm Terry Ruffalo.